Hello everyone, welcome to my online tutorial videos. My name is Rofo Chifu Bunkur, and I am the author of the just released book OHADA Accounting, Building Statistics and Tax Returns from Scratch. I'm sure most of you have seen this online, probably on LinkedIn or somewhere. And in this book, I try to, discuss the latest update to the OHADA accounting system, which is the updates that came into account, the revised SYSCOHADA, or you could call that the system comptable. The system comptable OHADA. So that's what we shall be looking at today in this video. Changes in the accounting treatments. Yeah, that's what we'll be looking at in this video. Because as you know, there has been some very major changes to accounting treatment, certain types of transactions. Because as you know, there has been so many changes to the accounting treatment. Certain types of transactions, are treated differently from the way they were treated before the revision. So we will be looking at these changes. So I'm going to take the first change, which is exploration costs. How to treat exploration costs now, and also how the prospecting fees is treated. This will apply only to, I can say, companies like mining companies or petroleum companies. Any company that has to do with extraction of minerals, of natural resources generally. Of natural resources. Yeah, so if your company deals in the extraction of natural resources, then you are likely to have this must be of interest to you, because there has been a change in the way that exploration and prospecting fees is being treated. I know companies that deal in the extraction of natural resources has huge costs in this case. For example, if your company is a petroleum company and you want to start drilling, probably you have this kind of cost a lot, because you probably have to pay geophysicians, you have to pay for surveys, you have to pay for so many things, so you have this kind of cost. So before we dive into what the accounting treatment is now as per the revised OHADA, let's first of all just look at a brief definition of the prospecting fees. A brief definition, so that we are on the same page. Okay, so now prospecting fees can be defined as direct and indirect costs incurred to identify areas of interest that may warrant detailed exploration. So you get to understand that prospecting fee is like, it comes before you start spending on anything like exploration. So it's any direct or indirect cost that you incur to identify the interest in the first place. Such costs include those incurred for topographical, geological, and geophysical studies, rights of access to properties in order to conduct such studies, salaries, equipment, instruments, and supplies for geologists, including geophysical crews and others conducting such studies, and overhead that can be identified with these activities. So that was just a brief definition of the prospecting fees. Yeah, for those of you who are into these companies, I mean, you should know this definition already. Now, exploration cost is an expense necessitated for determining the existence, location, quality, or economic value of a mineral deposit. The cost does not include the expense incurred for putting a mine into production to obtain the mineral. So guys, that was the exploration cost. That was the definition of the exploration cost. So this is just the cost that you incur, in trying to locate, identify the economic value of a mineral deposit. Now, having known the definition of this cost, let's look at the treatment, the accounting treatment before revision. That's what did the OHADA accounting system say you should do with such costs before revision. Now, before revision, all these costs were capitalized. So we can say they were capitalized expenses, and they would show on the asset side of the balance sheet. And that was how it was treated. So by the time you start incurring any cost, what happened is that you will just pass it into the asset account. Now, as per the revised OHADA, prospecting fees is outrightly expense. As you can see here, it is expense outrightly. But as for the exploration cost, you only expense it right up to the point where the company actually obtains the legal right to explore that mineral or natural resource. So there is a point where if you incur that cost before that point, you're going to expense it. But after that point, you are going to actually capitalize it. So that point is when the company obtains legal rights to explore or extract that natural resource. Yeah. So that is basically that's basically what happens. So before this point, you have to expense it. You expense the cost, and after this point, you capitalize. So this is what gives you the mark of how you're going to treat the exploration fees or the exploration costs. Now let's check out this example. This is just an example that I created just for illustration purposes. A new petroleum company, Exopec, just had its exploration license to operate in Cameroon on the 3rd of April 2019. But on the 1st of January 2019, they spent 14 million francs CFA to pay a consultant to carry out a study to determine the capacity of the well they intend to explore. In June same year, that's after they had the right, a total sum of 95 million francs CFA was spent on drill site preparation. As an accountant of this company, prepare the accounting entries to be posted in your accounting system. Now, so remember there are two expenditures, transactions that happened here, 14 million and 95 million. And the first one happened before they had their rights, legal rights to explore it, and then the second one actually happened after. Now the accounting entries will be debit account 6261, studies and research work. That's an expense account of 14 million, and then a credit bank, of course. That will be if they actually paid, through check or something. And the second entry will be capitalized, which is debit account 2191, research and development expenses of 95 million, and then you credit, your credit bank of 95 million. So these are treated differently because one came after the legal rights had been acquired, and the other one was before. So, ladies and gentlemen, thanks for watching. These are the kind of things you're going to see in chapter 5 of my book, OHADA Accounting and Building Statistics and Tax Returns from Scratch. And believe me, you're going to find many more of such accounting treatments. The changes, it's all found here. So if you are yet to grab a copy, please just make sure that you get one. It's going to be of great help to you in the industry and like a practicing accountant. So I'll urge that you grab a copy of this book, OHADA Accounting, Building Statistics and Tax Returns from Scratch. And if you found this video resourceful, please make sure you click on the subscribe button to this channel, and don't forget to share. And I'd also like to read from you. I would like to get your comment about this. Thanks for watching, and I'll see you in my next video. Bye-bye.